If that rate number feels hard to read, you're in good company. Mortgage rates can feel like a moving target because they react to the economy, the bond market, and lender pricing. In the next few minutes, we'll turn that noise into a clearer home buying decision. Here is the first thing buyers often miss: a quote is only a snapshot. It tells you what a lender can offer at that moment, under that set of assumptions. Rates can move daily, and sometimes intraday. Until you lock, the market can still change the terms before closing. Think of your rate as a chain, not one switch. Inflation expectations move the bond market. Bond movement affects mortgage-backed securities, which influence lender pricing. Then the lender adds its own margin, capacity, and program rules. Finally, your credit, down payment, loan type, and property details finish the quote. One useful signal is the 10-year Treasury. It is not your mortgage rate, and it will not match your quote point for point. But it reflects how investors feel about inflation, growth, and risk. When that signal shifts, mortgage pricing often leans in the same direction. When the market feels noisy, focus on the drivers that usually matter. Inflation reports can reset expectations quickly. Fed guidance can change how markets price the future path of rates. Bond yields show investors repricing risk. And lender capacity can affect how aggressively a lender prices loans on a given day. Then it gets personal. Two buyers can shop the same day and still see different offers. Credit score, loan-to-value, occupancy, property type, points, and fees all shape the final rate and cost mix. That is why the headline rate online is a starting point, not a promise. This is where smart comparison helps. A lower rate may require more cash upfront through points or fees. A higher rate may include a lender credit that reduces closing costs. Neither one is automatically better. The better question is which offer fits your cash flow, your savings, and how long you may keep the loan. Before you assume the quote is protected, ask about the lock. A lock usually protects the offer only for a defined window, and only if your loan details stay the same. Common lock options are 30, 45, or 60 days. Also ask what happens if closing is delayed and whether an extension has a cost. Also keep rate, APR, and payment in separate lanes. Rate helps estimate principal and interest. APR helps compare certain loan costs over time. But your real monthly budget still includes property taxes, homeowner's insurance, possible HOA dues, and the cash you need to close. Here is the buyer move: ask every lender to quote the same scenario, on the same day, with the same lock period. Use the same loan amount, down payment, credit assumptions, and point structure. Then compare assumptions, monthly payment, upfront cash, credits, and break-even timeline. So the goal is not simply the lowest advertised rate. The goal is the clearest decision. Understand what moved the quote, compare the full offer, lock intentionally, and choose the payment that fits your life instead of reacting to one headline number. Learn more at Rateshive.com, and follow Rateshive for more mortgage clarity. Subscribe to the Rateshive YouTube channel, and hit the bell icon for new updates.